Okay, let's jump into the daily recap for Friday, June 16th. Total on the day was a negative $379. Small loss in the day, mainly because we had multiple hedges all expiring on Friday. So our hedges really was what put us behind on the day. It's all good. I do not mind putting some hedges on. It's an expense when you're running a business to have insurance. So having those hedges on has been good. Let's take a look at what those are. So we'll take a look at the first trade here. It was a put butterfly in XLC. So on the communications sector, ETF, we bought the put butterfly for 20-cent debit on the 7th, expired again 9 days later here today for $0. So lost 160 bucks on that one, betting again that we were overbought. And we looked to go out about 2 weeks, nine days on that. And we did not get any pullback whatsoever really in the market on that. So one hedge down. Next trade here was an XLK. So using the technology sector ETF, did the exact same thing, put on a put butterfly back on the 7th, paid 50 cents for this one. 9 days in trade, expired, worthless today, lost 150 bucks. Again, low risk, high reward type of trades on downside, 2 hedges down. The next one was a put butterfly on the NASDAQ futures. Opened this one on the 31st of May, 16 days in the trade on this one. Did not get any sort of pullback at all on NASDAQ. My guess is that since all of these hedges expired today, next week should be a pretty good down week. We still have some on, but most of them have come off now. QQQ, we also had a put butterfly on this one on May 30th, so 17 days, lost 135 bucks on this trade. And then the next one here is SPX. So we also did one on SPX, the butterfly. We put this one back in April 19th. We opened it up for $3.20 debit, 320 bucks. On this, expired here about 2 months later. We got no down moves really on SPX over the last 60 days. So this hedge was a little bit larger hedge that expired. And then we also had a SPY. I don't know why this says SPX. It's actually SPY. So this is a SPY put butterfly. So, or a SPY put is what it is. So let me fix that for you really quick. Yeah, this was a SPY put here. So this SPY put was bought back on March 10th. So we were in this trade almost 100 days. Again, I do put these hedges on around 120 days. There's always a few of these running just to hedge some of our longer positions that we have that aren't normally hedged either by the 112 or something. So if we're looking at strangles and other things in case we make some moves higher. This one lost 1,584 bucks, but it took almost 4 months to do so. Again, I'm okay with a hedge and losing a little bit of my account every couple months or so on this. And then last trade here was an XLE call butterfly. We were looking for XLE to make a little bit of a move. It made a move and then kind of fizzled out. So not enough of a move for us to really capture anything on this one. Opened it on the 7th, 9 days in trade, lost 188 bucks on that. So those are the losers for the day. Let's take a look at some of the winners for the day. So again, we had a lot of trades closed Friday. We've been selling covered calls on our Amazon synthetic stock positions. This one was put on last Friday for 86-cent credit. We have 300 shares or 3 contracts on this. So we're always selling 3 contracts. We were in this trade actually only 7 days on this one. So 7 days in this particular trade on Amazon and give us a premium capture of 94%. And we really have no margin requirements on this particular one. So That's all good on Amazon, just removing our cost basis or making income, however you want to look at it, $243 to the good in a week. And then the last trade here was our ES long-term 112. And on this particular trade, we opened the LS or the LT, the long-term 112 on ES futures back on February 8th. Again, we do these at about 120 days in the trade. We did close the naked put on this back on May 18th when it hit 95%. So we've been only just keeping these put debit spreads alive on this particular trade. So $2,270 on this trade in 128 days, 97% premium capture, and it turns out to be a 20.5% return on the margin that we used. So great returns. Our core trades here, these LT112. So overall on the day, small loss, $379 on the day. Our loss on the week was around $2,600, mainly because we had a pretty substantial loss on the UNH trade that we posted on the 14th. And that trade really is what did us in for the week. However, we're still up over $3,000 for the month, and we are at 1.15% return this month so far, and we're at the halfway point with $3,000 in. And we're looking for about $7,000 to $8,000 on the month. So we're in pretty good shape. We've got another long-term 112 to expire. We've got multiple gold and ES strangles. We have several other strangles on futures that are potentially coming due. And then we've also got a couple 112s on futures. Probably none going to come off this month, although I think we have a one on gold that will expire this particular month. So we'll be looking for some of those to hit. So overall, decent week in the market. Our P&L was down a tad, but our net lick, moved up quite a bit from yesterday, several $1,000s higher. So that's the trade recap for the day, Friday, June 16th. Have a fantastic rest of your weekend. Thanks. Bye-bye.